right, let's go.
All right, Matt, we're recording. Welcome to the Once Bitten podcast.
Thanks for having me on, Daniel. It's good to see you.
Good to see you too, mate. And thank you for stepping now into the podcasting kind of. You've just done Canute's show a week or so ago. So it's like Canute, I've been watching your videos since way back when you launched the original show. And you can tell the listeners or the viewers about that, obviously. And you never went on any other podcasts. I remember reaching out to you a long time ago. It's like, would you like to come on and discuss? And yeah, I'm just kind of concentrating on my own thing, putting out daily content. I'm like, okay, yeah, all the power to you. So yeah, something switched now. You're more than happy to come on and have discussions, which is it's great to see. And the content of your channel certainly changed. So we'll get into that as well.
It's very true. The two things might be related as well.
Okay. But what I like to do with the show, obviously, is let people know who you are and a little bit about your background. You and I both had experience in what you'd call TradFi, but before we even knew it was called TradFi, it was just
That's
financial
right.
services back in those days. So yeah, let's hear about a little bit about that. Where were you cutting your teeth? What's kind of your background? University to getting your first job and then creating your career.
Yeah. So I was an undergraduate at Stanford University in the late 80s, early 90s, and I studied English literature and music composition. It was sort of a double major, English and music. I actually started out in physics. I did a year of physics as well, which was always my love, and but found that it was more fun in the humanities, and it was a little more time to sit back and drink pints with people and drink some coffee and talk literature, etc. Then when I graduated from Stanford, the job market was quite bad, and Silicon Valley was going through this period where, I mean, first of all, I had an English major as well, which is it's always unclear what the career track is for that, but I've always been a bit of an idealist. Silicon Valley was going through a point where it wasn't quite the Netscape moment of 1995 when the start of the modern internet and the dot-com boom. It was sort of defense winding down. So Silicon Valley was kind of a depressing place at that point. And I was very deep into the humanities. I wanted to become a professor. So I ended up doing a PhD over the next 7 years at UC Berkeley. And actually, while I was still an undergrad at Stanford, I took a class from a guy who's now quite famous named Professor René Girard, who actually was inducted into the Académie Française before his death. He's one of these cultural theorists, interdisciplinary cultural theorists, who's had a big impact. I've heard various Bitcoiners talking about him as well. I think I've heard Jimmy Song and Robert Breedlove talk about him. But he became a good friend of mine, and I briefly went to the same church as he did. And he and his wife came to my wedding, etc. So he was a real mentor for me. He ended up being one of my dissertation advisors. He was on my committee. So I sort of had Berkeley professors and Stanford professors on there. And as part of the reason I bring this up is as part of there was this sort of cult of personality surrounding Girard because he was such a massive intellect, and he was just a cool person to hang out with. And it was much like Bitcoiners today. If you find a crowd of Bitcoiners, it's always going to be a good time and very interesting. And it's the same for the Girardians, as we called ourselves. And so we would have these Friday meetings, and then we'd go out and get drinks afterwards. And one of the people I met through this meeting was this weekly salon, or whatever you'd call it, was a guy named Peter Thiel, who was running a small global macro hedge fund. He was sort of figuring out the internet, and he thought that there might be a future in payments on the internet. He started a company that basically allowed you to send money between Palm Pilots, and that didn't work very well. I guess the idea was to sort of pay for beers at the bar. You could split tips or split beers, and so they morphed the business. He and his business partner Max Levchin morphed it into what became PayPal. This idea of sending, basically using email as a communication channel or payment channel, and so I got to know Peter as part of the Girard group. And I became more and more interested in the markets in the late 90s. I went back to a Stanford reunion and found that all my friends were getting rich on tech stocks and doing all this trading and investing. And some of them, I was thinking to myself, well, I think I'm smarter than they are, and they seem to be doing pretty well here. So, and then I began to go down the sort of finance rabbit hole and became very interested in trading, especially systems trading, very systematic trading, looking for market inefficiencies. And in the late 90s, there were many of them. There were various momentum effects. There were sort of follow-throughs from price earnings announcement. There's something called price earnings announcement drift. These various market anomalies, many of which have closed at this point. And so I began trading. There are various arbitrage opportunities as well between various trading networks, what were called ECNs back then, and then we had market makers. And there's some inefficiencies where you could get, for example, the Goldman Sachs market maker to give you 100 shares of stock. This was, if people have heard of the SOS bandits, SOES bandits, you could force them to give you some stock. And this was meant to sort of level the playing field on Wall Street after the 1987 crash. And so I remember you could sit there on the bid, and for some reason Goldman Sachs had to sell you 100 shares, hit the bid, or you lifted the offer, and then you could go around and flip the 100 shares very quickly on one of these alternate networks, the Island ECN or one of these. Arca was another one. So these various market inefficiencies, and as part of this whole Girard thing, Peter and I used to hang out after the seminar was done and trade notes on the market. And I remember talking to him during the long-term capital crisis and when Russia defaulted on their debts and the whole Asian crisis. And so this would be 97, 98, and when long-term capital blew up. And we were trading notes. And at one point, he began to ask me, well, do you think your trading strategy would work with $10 million or $100 million? And I didn't really know where he was going with that, but then I gradually realized that he was planning to restart his hedge fund after he got out of PayPal. So he sold PayPal to eBay in 2002, took home about $50 million in his Roth, so he didn't have to pay taxes on it, and then basically rebooted his macro hedge fund and hired all his friends. And so we were this ragtag group of people. I was like literally just an English PhD. My only two jobs before that were delivering pizza for Domino's Pizza when I was in college, and teaching as a graduate student instructor at UC Berkeley. But my third job was working for a global macro hedge fund. We started with $50 million in 2003. And by the time I left, we had scaled it up to $2 billion, and we had very good returns. We were sort of a George Soros style macro hedge fund in that we were very leveraged, and we were doing directional trading. We were making large macro bets, obviously like Soros did with the pound. We weren't doing these sort of hedged, highly leveraged bets that got shops like long-term capital in trouble, and it ended up them blowing up. So one of the things I really learned from Peter was the importance of having conviction and putting on really big trades and holding them till fruition and really investing from first principles. So I think I may have mentioned this on Knut's podcast, but the first day of work when I showed up in 2003, I go into the conference room and everyone's talking about what's going to happen to the U.S. banking system when Fannie and Freddie blow up due to a housing downturn. And this is obviously what ended up happening in late 2007, 2008. So Peter was very, very much ahead of his time in many things and taught me. We started off having these various trading silos. I was doing systems trading and some of this arbitrage. And then eventually we collapsed everything down into macro, and we became a macro-only fund. And we became sort of notorious in this space, like Lloyd Blankfein from Goldman Sachs used to drop in. And the thing you and I have in common is we were doing quite a bit of currency trading at some point. And I had a lot of contacts with various brokers in Singapore, which I think you were at the same time. So I don't think we ever spoke directly, but we were definitely moving in similar circles.
Yeah, I'm sure you'd have been talking to the prime brokerage desks on within like the banking silos. So like the JP Morgans, the Morgan Stanleys, the HSBCs, whatever, those guys you'd have been in touch with. I was the lowly interdealer broker where we weren't part of the banking system. We would just basically we were a place that the prices would come to. That the
Okay.
banks would plug into us, and we were the marketplace. So, yeah, a hedge fund like you would call up two or three of your prime dealer brokers or sales desks at banks, and you'd want a price perhaps in an option, like 6 month dollar yen 125 strike or something in
Yeah, exactly.
$350 million, or maybe it's Hong Kong dollar, or whatever, right? Choose your currency. Then they would, that dealer broker you'd be dealing with, he would talk to the front desk and get really plugged in from the front desk trader, who I would be plugged into. So he would
Got
hear
it.
everything that was going on in the marketplace. I literally had a microphone like this, and I'd just be quoting numbers down it all day long. Like it was streaming information, currency options, and it was great fun when you're young and engaged in something. And I don't know, like you, look, I've done the full 180, right? I've been inside the belly of the beast. We know how the fiat system works, and now we understand what it actually represents. And you look back on
You
your
look back,
part
it's
in
quite
that.
dark. It's quite
Yeah.
dark, yeah.
Uh,
It's
Still,
kind of funny. Our two prime brokers when we started out, because we only had $50 million, which is nothing obviously in the hedge
yeah.
fund world. Our two prime brokers were Bear Stearns and Lehman Brothers, who, for those who don't know, you obviously know, were the two of the first to. Well, Bear Stearns went down very early in the crisis, so then Lehman Brothers basically took down the whole world, but
Mhm.
for the Fed and the other central banks printing and bailing everyone out. But then we got more money. Once we hit $100 million, and Goldman Sachs would pick up the phone. So we ended up with Goldman Sachs and Credit Suisse. And we actually, I remember placing a trade once, and we always had CNBC on, obviously, and I think we were buying the S&P 500 futures. And, we were buying a couple $1 billion worth of it, which was kind of an experience picking up the phone and buying $2 billion worth of S&P E-minis. And then the market began to move up a little bit. Hopefully we had pretty good trade executions, but the market was moving up a little bit. And it was funny to see on CNBC, of course, the talking heads had a reason for why the market was moving. They're bullish on the Iraq war or something. But what was actually happening was it was Clarion Capital in San Francisco was buying S&P futures. That was the real explanation. So that gave me a good insight into what you hear on CNBC is often just it's
Jim
narrative
Cramer.
fiction. Jim Cramer. Well, Jim Cramer's job is to get good fills for his friends. Like they need to buy, they need to sell, he pumps it up for them or whatever.
I can't believe that guy's still on television. Is he? I've
I
not
don't know. I don't know.
tuned out of that so long ago. But yeah, I did have a feel then back in the day that I had a belief that I was part of the great economic machine, because not only was there, so after obviously all the collapses of long-term capital, like the prop desks started closing down, the proprietary desks, which were
Yeah.
basically just gambling big amounts of money on behalf of the bank. So that'll change certainly after 2008. And it become much more of a risk management role, the front desk traders at the banks. And they would be hedging for airline companies, shipping companies, that car companies that had huge exposure to different currencies around the world. And that's the kind of business that was coming through on our end. So you did feel as though you were part of the global economic machine, but still, like, it's fiat at the end of the day. And
It is. I got an insight into the Fed as well because one of my friends at Clarion Capital, he before Clarion, he was I think it was the prop desk or some sort of bond desk at Bank of America. And he told me that, and I just couldn't even believe this at the time because he told me this in like 2003, 2004. He said during one of those crises, maybe it was long-term capital, where I think it was, August or September of 1998 or so when the market was just completely crashing. Bank of America and he and his buddies there, they got a call from the Fed saying buy bonds, buy stocks, buy everything. And it was a very good trade for them because then the Fed made an announcement and did emergency rate cut or whatever they did, and everything went up. So that gave me insight into the different tiers in the fiat financial system, where there really was these big banks used to get the tip from the Fed, which is the big daddy bank, and very very unfair system, insanely unfair system.
Yeah, you're always the last to know, especially retail.
Exactly.
That was one thing for me, grokking Bitcoin was, oh, we get to invest in something before Wall Street.
Yeah. When was the last time that happened? Like, it's extraordinary.
No, never. Everything was, is every new product I'd ever seen launched throughout my career was financial wizardry at the end of the day. Like, it was just
Yeah.
financial engineering, more derivatives on top of derivatives, and
100%.
more and more layers of underlying instead of like just owning the thing.
And this is something that's very strange, obviously, because you and I have this background, so we see it. But then when this comes into the Bitcoin space, this sort of financial engineering, I feel like people, especially a lot of newcomers or people who don't have this TradFi background like you and I do, they feel like they're a kid in a candy store. There are all these different securities and different derivatives of Bitcoin, and things will just give you exposure to the fiat price. And they don't really they don't have that context for structured products and financial engineering and what it did to the economy, and also how whoever buys those things always gets screwed. Like, that was always being sold to the rich doctors and dentists. Here's a special product, and then the bank would collect a fat fee on it and hedge everything out. And the doctor or dentist, not to pick on doctors or dentists, but there's an old joke in the futures market that when there's a big futures run, potato futures run or whatever, it's the wealthy dentists who buy at the top, because they're very smart and they have money, but they don't understand that they're the patsy at the table.
Yeah, it's like when you get shilled Bitcoin by your cab driver, right? Oh shit, right, okay, retail's here, the top's in.
Or when you get shilled Bitcoin Treasury Company securities by your cab driver,
Okay,
then you worry.
And this is a worry. This was a worry of mine when all of this started coming into the fray about 18 months ago. All of like this Bitcoin Treasury Company hype is, for want of a better word,
Yeah.
and now we've seen that hype carry through, and it got to a point where people were calling it the ICO craze of 2017. This is our moment now, and I agree with that to a certain extent, because there was a new Bitcoin Treasury Company being announced like every other day, it felt like. And the dangerous narrative that came with it was, we are building the bridges. Excuse me. We're building the bridges between the traditional financial system and the Bitcoin new parallel system, and we need these bridges to bring all of that kind of pent up capital from that system into this system.
It's almost like the XRP market pitch. We're the standard, and we're gonna integrate. We're gonna help you integrate between different currencies, or help you integrate with Swift, as if someone needed that.
So and the pitch was, you got all this trapped capital over here. Like, guys, like the trapped capital that you're talking about, like the sovereign wealth funds or the insurance or the reinsurance or the big hedge funds or whatever else, they don't buy penny stocks.
Yeah,
like they don't. So it's not an outright lie, but it's misleading and it's misguidance. Yeah. And so you created this hype. And a lot of the plebs, for want of a better term, everybody knows we use that word lovingly.
Oh, of course.
That had money in pension funds, whether that's 501k in the US or a Roth IRA or superannuation perhaps in Australia or here in the UK, SIPs they're called, SIPPs. They started using that pension money that they'd saved for a very, very long time, to start hooning in to these penny stocks that were getting pumped behind the scenes by the venture capitalists that were telling and crafting all of this story and using influential Bitcoin figures as figureheads to kind of make this, tangible and real. And that was what was very, very concerning for me. And I just know for a fact a lot of people got wrecked and are still hanging on to these things, hoping that one day they're going to come back.
Yeah. Yeah, it's
Retail's
very
always last to know.
It was interesting to see as well during that, and I made a few videos at the time, but there was this emergence of these new valuation techniques that were obviously just being trotted out to justify nosebleed valuations. And you and I had seen that many times since the 90s. When, for example, when internet stocks were being priced based on eyeballs or some crazy metric like this. And one of the things I remember arguing with people about, they were arguing that certain Bitcoin treasury companies should trade at, an eight multiple of MNAV or something like that, or eight multiple of the NAV of the underlying Bitcoin. And there were a lot of just unscrupulous characters who were happy to justify current valuations by just adjusting the metrics. Like, well, of course, this is equivalent to a growth stock, so of course it has to have growth stocks have high PEs, and so growth stock Bitcoin treasury companies, maybe they should deserve to trade at 8 times the underlying or something. But when you take a realistic look at it, you realize that you're paying $800,000 for a $100,000 Bitcoin, and there may be some growth there. They may be able to monetize the premium that the stock's trading at to the NAV, but not enough to justify an eight multiple or whatever. So it's funny that the same tricks are always coming in to justify high valuations.
Yeah, I'm not sure if I've managed to clean out my Twitter algo, but I never see MNAV anymore. Or what was the other one? BPS, Bitcoin earnings per share or something?
Yeah, Bitcoin per share.
Bitcoin per share. Yeah, I don't see that anymore. Like, what is it still happening? I know one company in the UK had to sell their Bitcoin, or a large portion of it. Satsuma Technologies or something they were called.
Oh, right. Yeah, I think a lot of the errors come out of that bubble, and people are licking their wounds. I think it's like most. I don't want to call it a tulip bubble because, of course, that always got applied to Bitcoin. But like most bubbles, there was a kernel of truth to the Bitcoin treasury company craze, and that kernel of truth is that Bitcoin is a very good corporate reserve asset. It's a very nice thing to hold on your balance sheet. So, for example, Apple is currently holding, let's just guess, $100 billion worth of T-bills. And those T-bills yield 4% or whatever they're yielding. And the rate of monetary debasement's like 8, 10, 12, 15%. So they're just bleeding shareholder purchasing power there. And so it really would make sense for them to, and they don't need to buy a Bitcoin treasury company to get exposure to Bitcoin. They could actually buy Bitcoin.
Mm-hmm. Well, they could buy original Saylor play back in.
This was the original Saylor play, and it was a very good idea. But then people saw how well MicroStrategy did, how well Strategy did, and then it bred a lot of copycats. And I remember when Saylor was talking about all the Bitcoin products he was going to come out with, various Lightning products, et cetera, and it almost sounded like he was going to be building infrastructure, which I was very excited about because Saylor, unlike most people in the space, is an actual engineer. I guess he's an aerospace engineer from MIT, and one of the that's one of the things I really liked about him and still like about him, because my take after the great financial crisis was that there had been a huge brain drain into finance, and all the good engineers and all the good math people got snapped up by the high frequency trading shops and the hedge funds, et cetera. And what America really needs is good engineers who are doing engineering. Unfortunately, engineering, it pays well, but it doesn't pay as well as finance. And so my takeaway from all that was the world needs more engineers and fewer financial engineers. And unfortunately, Michael Saylor has he could be anything he wants, but he's chosen the financial engineering route. And I just don't find that, people are welcome to do what they want with Bitcoin, but I think that's much less interesting. I've been there, I've done that, and It'll be interesting to see what he needs to do to keep the treadmill working and to continue to raise capital. Whether he started off using convertible bonds and then sort of graduated to then selling common stock and then also now selling various types of preferred stock. My concern would be, though, a lot of people just don't understand capital structure. They don't understand that even though products like Stretch, STRC are over collateralized by Bitcoin, there's still bondholders, there's senior debt holders who are ahead of those preferred stockholders, various unsecured debt holders. So again, I would urge people to, if you're going to invest in Bitcoin companies, Bitcoin Treasury companies, really, and we're lucky now because we have LLMs and they do hallucinate. But if you don't know how to do financial analysis, you can put some of that data into an LLM, ask it about the risks. You can read the risk disclaimer for all those things. And I fear that far too few people do that, and they're still people who think like they have a right to MicroStrategies, to strategies, Bitcoin, whereas they don't. It's not like an ETF. There's no convertibility there. So I would just encourage people to educate themselves, or if you just buy Bitcoin, it's a bearer asset, it's a digital commodity. There are a lot fewer moving parts. If Bitcoin fails, Bitcoin fails. But there are ways that Bitcoin treasury companies can fail without Bitcoin failing. So you're basically layering risk.
And the messaging again is very much directed at the retail market.
Unfortunately,
from the Stretch product.
Stretch is currently, according to Sailor's own statistics, is 80% retail. Right. And what I've been very disappointed in him is his now actively posting various DeFi companies that are willing to take your Stretch and do all the DeFi degeneracy with it and help you to add leverage to leverage and risk to risk. And of course, these DeFi protocols, a lot of them are built on Ethereum. And I used to make 2 videos a week about these things getting hacked. Like they're usually very poorly built. Some of the companies he's linked to, if you try to go to their websites, your browser won't even let you connect to them. Not because I'm a U.S. citizen, but because they don't even know how to make a browser that's safe to connect to over HTTPS or whatever. So that's disappointing to see.
All right. The underlying message here, Matt, from both of us is dollar cost average what you can each week or each month. Buy the thing. Buy Bitcoin.
If you want to own something, you buy the thing you want to own. You don't you don't buy this treasury company that then you swap into MSTR, that then you lever up, and then at the end of the day, hopefully you get the pot of gold, which is Bitcoin. You can actually just buy the pot of gold to begin with.
Stay humble, stack sats, self-custody your Bitcoin, and educate others, which is exactly what you've been doing, and I try to do on this show as well. And then on top of that, we didn't even touch on like the loan products and how dangerous because you've done a whole video on that as well. So did you just want to explain to people that are listening that might have Bitcoin placed at one of and I'm trying to be fair here, that there are companies that have been at this for a long time and do have a good track record. So again, you've got to do your own research here and understand what's going on. But then there's been a handful that have sprung up, and quite recently, especially again over the last 18 months, they come hand in hand, like the Bitcoin treasury companies and the loan products. Obviously, Jack at Strike is offering both and listed as well. So yeah, where do you see the dangers lie in the loan products?
Well, this was a topic that I used to cover a lot on the channel, and I like this fantasy of never selling your Bitcoin and borrowing against it, and then Bitcoin appreciates some more, and you can. I think it was actually Saylor who was one of the main people promoting this as well. It was buy, borrow, and die, or he had a very good slogan, which is basically you never have to pay off your loans, because what you can do is you can borrow against your Bitcoin. And it's the same with like a mortgage on your house. You probably never need to pay off your mortgage. You can just keep rolling it into lower interest rates, and you pay off your old debt with proceeds from the new debt you take out. So it's a very appealing idea. There's a lot of truth to it in the sense that a lot of big tech billionaires do this exact same strategy. So people like Gates and Bezos, and I've seen people do this obviously, where they borrow against their, Elon could borrow against his Tesla shares because at some point he didn't have any cash, and he had billions of dollars of Tesla stock. So it does make sense to borrow against them. But it's important to realize you are not Elon, you are not Bezos. And even when they were doing it, they didn't put their entire stash in there. Well, maybe Elon did. He'd be the one person who'd put everything in there and borrow against it. But most people don't do that. So there's that basic. So it's an interesting strategy. The problem is that if you start thinking adversarially about it, you begin to realize that if you that Bitcoin is obviously more volatile than any stock, and it has the potential to just do really crazy things, even crazier things than Amazon or Tesla. And so you can imagine a scenario where the traditional financial system wants to steal a lot of Bitcoin from people, and all they really need to do is to tank the market, which you can certainly do over short periods of time. It's impossible to manipulate large trillion-dollar assets for long periods of time. And so it's not like Wall Street can force Bitcoin to $5,000 a share and kill it by keeping it there. They can't do that. But what they can do is they can create panic. They can work together with the news to create spikes down. And they can obviously, the price of Bitcoin could stay down for a while. And the problem is, if you have Wall Street companies, especially, who have visibility into these order books, and they know where the liquidation points are for a lot of these Bitcoin loans. So the thing about Bitcoin loans is it's like any other security loan, where you have there's a point at which you get a margin call, and you have to basically add more Bitcoin or add more cash, or you end up having your Bitcoin taken away from you. And this is, if you borrow against 2% of your Bitcoin, probably not the end of the world. If it goes down a lot, you could meet a margin call. But people putting all their Bitcoin into a Bitcoin loan product, and then the last year was a great example. Everyone expected, probably myself as well, expected 2025 to sort of melt up in the fourth quarter. And if you took out a loan against your Bitcoin at 125,000, we were clearly going to 200,000 or 250 at least, conservatively. And so you might as well just do that and take the money out. Some people borrow money against their Bitcoin and then buy more Bitcoin with it. So that's sort of a leverage strategy. But the problem with this is it's a little bit like market makers searching for your stops, having visibility into where stop loss levels are in the markets. And obviously in the currency markets they can see where all the option products are clustering, and they can manipulate the market, try to take everyone out and liquidate them. And so something similar could happen to Bitcoin. It probably has happened to Bitcoin, where if enough Bitcoiners get liquidated at a certain level, there's this natural incentive for Bitcoin's price to seek that level, or people to manipulate it temporarily and basically steal everyone's Bitcoin. You can imagine a scenario where Bitcoin goes down to $1 per coin just very, very quickly. And depending on your loan terms, you might get liquidated while you're sleeping. If you don't answer the phone and you can't top it up with collateral really quickly, or maybe the Bitcoin network's very congested at that point, you can't get a transaction through because there's a spam attack. And so you end up losing all your Bitcoin. And this is a risk I feel like a lot of these companies don't make known. And then there's the added wrinkle, which I learned from you, was there's kind of an ethical component to this as well, where you have to ask yourself where the fiat comes from that pays for the fiat that they give you in exchange for your Bitcoin. And that is usually, I guess there are two ways of viewing this. You could think of it as sort of a speculative attack, but it's also, there's something just immoral about printing more dollars. And it's especially sinister if the end result is the person who gets those dollars ends up losing their Bitcoin when these new dollars have been generated ex nihilo, just out of nothing. So that was something that you taught me, that I think we were talking about usury in this context, just the ethics of money printing, which is a perennial problem.
Yeah. Well, usury is applying interest to to money that has been loaned, and that could be interest of any amount. Now that there is a gray area there, because if you've got, and I've done an interview with Neil Flesher about this, the author of Modern Chains. Let's say you were backing as an entrepreneur yourself, or as a capitalist, someone with capital were to back a business, and you were to then add value to that business, and you expected income back on top of your initial investment, then that's one thing. The money existed in the first place. But what we pay interest on today is just printed money, like counterfeit money, and that you can apply that to the mortgage you have on your house, or the loan you have for your car, or whatever it is that you've bought on finance or credit. You are paying pure usury because the money didn't exist. The banks literally place that money into your bank account. Now, that's the problem with some of these loan products, because we don't know where. That's the gray area. That as transparent as any loan company is going to be with their terms and conditions and whatever else, you still don't know where the fiat is coming from. And it could well be, maybe they're coming from high net worth individuals or family offices, and that money does exist, and they're just taking the opportunity to earn better interest on their outlay than they would be buying bonds and whatever, fixed income. But if some of these providers are on Wall Street, or even worse, banks, then you're giving up Bitcoin in return for counterfeit money, and you are carrying all of that risk. Like you said, it only has to be a flash crash. It could be, and that could be blamed, as usual, on a fat finger trade, right? That somebody somewhere like input the wrong order, and that price, that tanked the price of Bitcoin for 45 minutes, and nobody knew what was going on, and it dropped by $50,000. And you wake up, that's happened. You're swept. You're cleaned out. You're probably still on the hook for extra.
Yeah, you'll still owe that margin call money, probably.
So these are like these. This isn't hyperbolic stuff that Matt and I are talking about for those listening now. These are real concerns that you please take a lot.
Wall Street there's a reason they call it swimming with the sharks, because those people. I was on what's called the buy side of things, and I guess you were more on the sell side of things. But even this is one of the funny things, because people often lump hedge funds in with the banks, et cetera. And we view the buy side usually views the banks as the enemy, obviously, and we had sort of a libertarian take as well. But one of the things we're very aware of is just how we could get our face ripped off by Goldman or and they're very happy to do it. They're always, and so you learn very quickly if you see a product or a trade where it's like, wow, this price looks really good. Like this is, you got to run the other direction immediately because there's something terrible about it. Like you should always feel like a little pain when you're entering a trade, because at least you're paying a fee or commission then, and the bank's getting their money. But if it just looks like a free lunch, that means you're going to be taken to the cleaners. And Bitcoin loan products, some of them are like this. Another problem we didn't really talk about was rehypothecation, where they lend out. I think some of the better companies don't do this now, where you give them Bitcoin, you get a loan, and then they lend out the Bitcoin to Three Arrows Capital, for example, which happened a couple of years ago. And then Three Arrows Capital lost it, and then BlockFi and other companies, BlockFi and Voyager and Celsius, then didn't have the Bitcoin to return to the customers. And then there's also the risk, even if you use a product. I don't really want to name any company names, but there's one that's really well known that's advertised on a lot of podcasts, and they advertise they don't do rehypothecation and they've never lost anyone's Bitcoin, et cetera. Problem is they can still lose your Bitcoin, and it's very unlikely that you're fully insured for it. If they lose a lot of people, last time, I haven't looked at it in a while, but I remember looking at Coinbase's terms for their insurance. And they had, a couple $100 million worth of insurance for all the crypto and Bitcoin they were holding. And then they had billions of dollars of Bitcoin. And so if they did have a hack, the insurance would pay everyone 5 cents on the dollar or whatever. So it's just like Bitcoin Treasury Companies. You have to read the fine print. And I would say taking out a Bitcoin, if someone in your family needs medical they're good reasons to spend Bitcoin, even to spend long-term Bitcoin savings, because, your family, the reason you have money is to take care of your family and your children and your spouse, et cetera. And so in that case, if someone needs emergency cancer treatment or something, you really should just sell your Bitcoin, spend your Bitcoin. And this idea of trying to have your cake and eat it too, or if you're trying to play catch up, or if you just have, there are people who take loans against their Bitcoin for what I would consider really bad reasons, like to buy a Lambo or to buy a depreciating asset, or just we're all subject to it because we all live in the fiat world, but this sort of fiat brain, low time preference behavior where you want it's the same reason people rack up huge bills on their credit cards, where they want to appear fiat rich even though they're not. And it's Bitcoin is very brutal. The only way you can there are no shortcuts. There's no way to play catch up. And I know this as someone we didn't talk about, but I first heard about Bitcoin in 2011. I had an opportunity to buy 10,000 coins. And I didn't take it because I told my friend it wouldn't move my net worth at all. That's obviously worth, what is that worth now? Is it 7 billion or 7.5 billion dollars or 750 million, whatever it is. So we all don't have enough Bitcoin, and even a lot of OGs, bought pizzas with their Bitcoin or sold, or just spend it frivolously or send them to friends, etc. But the one thing, the way people get hurt is trying to do catch up. So that was the main reason people bought MSTR. It wasn't for Saylor's vision. It was because they wanted a levered version of Bitcoin and they wanted to play catch up. And it's the same reason that people sometimes take Bitcoin loans to either buy goods and services that maybe they shouldn't be buying because Bitcoin compounds, so massively over long periods of time, or so it's a sort of trying to play catch up, either using leverage, trying to generate a yield with your Bitcoin is another big mistake because Bitcoin is a product. It's like gold. Bitcoin does not have a natural yield, and so as you and I know, and everyone likes to say in Bitcoin, where does the yield come from? And we usually critique crypto for this, but if you're getting a yield on your Bitcoin, there's no such thing. That's usury, I guess, because Bitcoin doesn't have a natural interest income stream or natural cash flow in the same way that gold does.
So I heard you the other day on Twitter Spaces. So we'll move away from like the financial markets for now, and we'll start talking about the recent videos that you've been putting out, and that's around like the current debate, the op size wars, the spam wars, whatever you want to call it. Block size wars are obviously a thing of the past. Back in the day, we had op size wars before them. In fact, like 2013, 2014, the original debate. Before we get into that, I just want to clear something up because the spaces you were on the other day with, I won't even name him, but he basically started yelling and screaming, saying, "Yeah, well, you used to work for Peter Thiel, blah, blah, blah," which you've just talked about. So
right.
He's using that as like an accusation or trying to undermine your character or your judgment. But yeah, so I don't know what are your current thoughts on Peter and what he's up to with his investments in Palantir and like the digital panopticon? Like where did it all go wrong for him, someone that was more freedom kind of minded, wanted to usher in new payments to that was I remember actually at because I used to drop in at PayPal in Palo Alto when it was a startup, and go to their parties, and then at Clarium they actually had these T-shirts made that said "PayPal, the new world currency." So this was definitely something. So Peter was a hardcore libertarian, loved to quote Ayn Rand, and also loved Christian literature as well. People like Tolkien. So obviously, a lot of his companies, like Palantir, come from Tolkien's books. And it's a weird thing for me to talk about. Well, the first thing I should say at the outset is the last time I was on Peter Thiel's payroll was in 2006,
And some of these people who make these accusations and question my incentives, they're literally being paid by places like Bitcoin Magazine in 2026. So there's a difference there. I suppose I could be a sleeper agent for Peter Thiel. The problem is I've spent a lot of time attacking his products, his projects. I spent many years attacking Ethereum. What a lot of people don't know is that Peter helped to fund Vitalik Buterin. I think he actually received one of these special scholarships that Peter was doing. I forget the name of them, but it was basically I pay you $100,000 a year not to go to college. And I think Vitalik actually received funding from that for Ethereum. So not a fan of Ethereum. And then in the most recent spam wars, one of the companies that my side has been attacking, or our side has been attacking, has been Citria, which is we call it Shitria, which is a Peter Thiel company. So it's
Was that Y Combinator? Was that what?
It was Founders Fund is Peter's
Right. Okay.
is Peter's thing, and the thing about Peter Thiel is he invests in every company. So it's a little bit like BlackRock. When you say BlackRock controls this or that, sometimes they do, sometimes they don't, but sometimes they just have a lot of shareholders who own it. And Founders Fund invests in everything. And Peter's clearly a visionary. So this is similar to what we've talked about with Michael Saylor. Like Michael Saylor, someone I admire his intellect. He's always been very nice to me. He's a brilliant guy, very talented guy. And the same as Peter, with Peter. So Peter is the smartest guy I've ever met. Like he absolutely has a beautiful mind, and he's equally at home in the humanities, talking about, I think he actually majored in philosophy at Stanford. He's just, he can talk about anything. He can talk about New Testament theology. He can talk about cryptography. He can talk about, obviously he's very good at doing Silicon Valley startups, et cetera. And he's someone who gave me my start in the business, and we hung out a lot, especially in the late '90s and the early 2000s when I was working for him. And he came to my wedding, for example, and he came to my bachelor's party. He's a very good guy and has been very good to me. I've been sad to see that the direction that he's taken, and I'm not really sure what that is. And he's obviously been going in that direction for a long time, where I think it's just very difficult to avoid the ring of power, to use the Tolkien metaphor. And Peter was very successful with PayPal. And then various opportunities opened up, and it's hard to know. So, for example, Palantir, one of the main funders of that was In-Q-Tel, which is the investment arm of the CIA. And so Palantir was formed in 2003, 2004. I think it was incorporated, and it had, I think George Soros was an original investor as well, And so Peter and his whole apparatus, they've obviously been incredibly successful. Peter's been very successful at bankrolling various candidates in American politics, most prominently J.D. Vance, who is now, could be the next president, is about as high up as you get as vice president. But the turn that Peter has taken is just, I knew him personally in the 90s. I knew he was a devout libertarian. And he really believed these things. And then he's now into less good things, surveillance things. Obviously, Palantir is probably the most dangerous, evil company in the world. And I can say that as someone who was an early investor in it, because the guy who used to work for me at Clarion was one of the co-founders, a guy named Joe Lonsdale. So I did a little consulting work for them in the early days, and I got some shares. I didn't get that many shares, but the shares did very well. And so I have that on my. I sort of still have that on my conscience. Back then. I was hanging out with libertarians. I was more of kind of I voted for George W. Bush in 2000. I didn't think that Al Gore invented the internet, so I wasn't willing to vote for him. And his story about polar bears dying, I even knew at the time that wasn't going to happen. All the polar bears haven't died yet. But I was kind of a normie Republican. And the premise of Palantir was to stop the next September 11th and to basically allow these different, and of course, knowing what we now know about September 11th or what we don't know about it, it wasn't just a failure of government databases failing to talk to each other. Various groups like the Mossad clearly knew what was going to happen. But Palantir was sold as a way of getting government databases to talk to each other. One of the more interesting charts I saw was when I visited Palantir in their original headquarters. When I got to play around with their software, which was just amazing. And they had a chart, they had an org chart on the wall of the US government, just as many departments and agencies as they could discover. And they obviously had CIA connections, so they could probably discover. And I remember looking at that, and we didn't have cameras on our phones back then. There's still flip phones. But I remember looking at it and just like being amazed, like, I have no idea, like I've never heard of these agencies. And some of them probably people had heard about, but. So all of which is to say that providing surveillance for the U.S. government, funding crypto scams, these are not libertarian values, and so I don't really know what's gone on there, and I haven't spoken with Peter in over 2 years at this point. So we sort of when I left the Bay Area. I think I left the Bay Area first, and then he left the Bay Area shortly after that. And so then we didn't really hang out as much. And I had young kids at the time as well. So we sort of grew apart. And he is, his rocket went to the moon. I mean, he became. I got to see go from the point where no one knew who Peter Thiel was to where he was, where everyone knew who he was. And so I don't really know why he does what he does, and it's a big disappointment to me. Just as some of the things Saylor's been doing recently are a big disappointment to me. But what I will say is that Peter is just genuinely talented and brilliant. So you can go back and say, did his wealth come from cooperating with intel agencies? And to a certain extent, obviously, when you have the CIA investing in your company, that's quite a backer. And then they can give you business. So he's just naturally incredibly talented and brilliant and very good at seeing the direction that things are going, just being 5 years ahead of everyone and investing that way. But I would hope that people who have been following my work over the last, to close the Palantir loop, I sold. As people might not know, if they don't invest in private companies like that, there's usually a lockup and there's not a lot of liquidity, and so I sold all my shares when Palantir finally went public in 2021, and after the 6-month lockup, and I put all the proceeds into Bitcoin at the time, which is it's sort of funny. I thought at the time that was just. It was a no-brainer from an ethical perspective, but actually Palantir has massively outperformed Bitcoin since then. So it wasn't, but at that point, I was kind of like, I don't really want to be in a George Soros CIA company that's doing surveillance. Though you could almost say that the perfect balanced portfolio, if you could only own 2 assets, and you were really cynical, would be Bitcoin and Palantir, because you've got the freedom money, you've got the exit there, and then you've got the digital prison on the other side. And it's sort of the two legs of the trade. But I sold all my Palantir for Bitcoin. And what I was going to say is I hope people who've been watching my videos for the last few years, I mean, I clearly could be playing some long-term game here where I'm trying to somehow get people back in the surveillance system. But in the process, I'm offending a lot of billionaires and making a lot of enemies and attacking Peter Thiel portfolio companies. So people will have to make their own decisions and decide. But I hope they'll watch my videos about privacy and surveillance and all these things and realize where I'm coming from.
So you said earlier you had that chance in 2011 to acquire the Bitcoin, and you never did. So how many years later did you kind of circle back around and start looking again at Bitcoin, and then the epiphanies that started dropping for you, and then we will move on to like BIP 110 and the spam?
Yeah, so I first heard about it from a friend, 2011. Did not end up buying it. I I just assumed it was a Ponzi. I assumed it was some sort of weird financial product, and I didn't even bother to read the white paper. I got interested in trading it. I think you can find videos of me on my channel where I'm trading Bitcoin at like, I don't know, 12,000 or something, and I flip it and make $1,000 or something. So that was 2015, 16, 17. I really began to go down the rabbit hole in 2018. I think I read Safe's book. I was reading, I was on Reddit and reading various essays. And the light bulb really went on. There was no like one work that I read that made the light bulb go on. But by the third quarter of 2019, that's when I started hodling, buying Bitcoin and hodling and getting serious about it. And it was the same time that the U.S. was going through the repo crisis, where short-term rates were spiking, and the Fed had to come in and actually start printing money just 6 months before COVID. So it's sort of my macro background, realizing just understanding how the central bank worked. And this was one of the things that was too bad, because I was very pro gold and kind of more of a Ron Paul guy and against the bailouts from the great financial crisis. And so I really hated the Fed and hated central banks. But in 2011, there just wasn't some people made that leap, which I wasn't able to, that this was a way of fighting the central banks. And if someone had told me it was digital gold, and Bitcoin's obviously much more than that, but if someone had used that analogy, I think I would have definitely bought it. And, I probably would have sold it after it doubled or tripled or something. But it was really seeing the repo crisis of the third quarter of 2019 and realizing and understanding the federal debt situation in the U.S. and understanding that the Fed was, and having seen the quantitative easing during the great financial crisis, I began to realize that this was a scarce asset that was really programmed to go up programmed to go up in U.S. dollar terms, simply because it had a fixed supply, and the U.S. dollar the money supply would have to inflate to 100 trillion or 200 trillion just to service the future debt obligations and entitlements, et cetera. So sort of the macro coming together with just reading some good Bitcoin essays and books.
And then when did the alarm bells start ringing for you with like the Ordinals and the BRC20 tokens? Was that early on that you straight on to like, this isn't what Bitcoin's supposed to be for?
I was really puzzled by them to begin with. So you can go back on my channel, and I was basically making videos on both sides of it, where I would try to steel man both sides. And I like the idea. I remember liking the idea of, we can put the Declaration of Independence on the blockchain, or doing stuff like that, or the China tank man, the guy in Tiananmen Square, like these, that was already on the blockchain at that point. I don't think I was running a node at that point, though, so I didn't really understand that there were some externalities that came with Bitcoin inscriptions and other storing arbitrary data on the blockchain, that this wasn't a free lunch, and it also wasn't the best place to put things, that it made spinning up a new node much more difficult. The alarm bells started really going off when I saw various crypto VCs like David Bailey of Bitcoin Magazine and the Bitcoin Conference actively investing in companies, in Bitcoin spam companies like Taproot Wizards, promoting them in his magazine at the conference, basically saying, we're going to bring shitcoins back to Bitcoin. And this is a good thing because it's going to pay minor transaction fees. And people are going to have to spin up Bitcoin nodes in order to run Ordinals nodes. Sort of these half-truths that turned out to be basically intellectual justifications for printing shitcoins on Bitcoin and issuing token scams. And you can look at UTXO Management, which is the hedge fund VC arm of David Bailey's empire, and they've invested in many of these Bitcoin, what I consider Bitcoin affinity scams and Bitcoin spam companies like Taproot Wizards. And so when I began to see the incentives involved, and obviously no new Bitcoiners started spinning up new nodes so they could monitor their ordinals and their inscriptions. They did it. It was just another casino. And it was bringing back old ideas. It was basically bringing back some of the ideas from 2013 and 2014 when it came to various meta protocols on Bitcoin, like Counterparty and Omni and colored coins, etc. Just wrapping them back up and justifying it, saying, well, Bitcoin is a Swiss Army knife. It can do everything. We're going to bring, the most insane idea was, oh, we're going to onboard new Bitcoiners by onboarding them into shitcoin scams on Bitcoin, which is a really good way of just hurting Bitcoin's brand, because these are scammy tokens. They can go up a lot and then they always crash afterwards, and people get hurt. And then those people, they're never going to come back to Bitcoin, or it's going to take them 5 or 10 years to get back to Bitcoin because they've been scammed. And so I went back and forth, and then at some point, I think I started running a node at that point finally, and then I began to realize that it was the node, that there was no free lunch here, and that basically the big Bitcoin media companies and crypto VCs were making money from this. The miners, the Bitcoin miners and large mining pools were making money from this, and the portfolio companies were making money from this. And then Bitcoin plebs were being screwed and left holding the bag. And then the litter, the trash and all the destructions is still on the blockchain. Like it ended up staying on the blockchain. And that's when I really started attacking various people in the space, particularly David Bailey. I think one of the worst things you can do is mislead new Bitcoiners. And when you're onboarding them, someone goes to a Bitcoin conference for their first time, and there are people on stage dancing around wizard costumes, telling you to buy JPEGs on Bitcoin. I think this is as bad as any shitcoin scam, because at least shitcoin scams, we all kind of know they're shitcoins. But when you bring stuff on into Bitcoin, it gives it an aura of legitimacy, and it really fools a lot of people. And it's a complicated topic, so you can't expect people not to be fooled. And then, of course, it's the same game we were talking about before, where people are like, oh, I missed out on Bitcoin, but here's some assets on Bitcoin. And Bitcoin's a real thing, so I'm going to play catch up here because I wasn't lucky enough to buy it in 2011. And of course, they end up losing all of these products. Even the best NFTs, are down 95%.
And this is where people kind of saw the other side of Matt, because the channel up until that point had been, plain sailing. It was about investing. It was very informative, and all of a sudden, and this is
well, not quite though. I would the change was, and one of the reasons people love the channel is I would just rip apart shitcoiners on the channel, and I'd call Vitalik, cat purse boy, and I'd make fun of Charles Hoskinson, and I actually. I made so much fun of Charles Hoskinson and Cardano, I began to actually get threats from Charles via various people saying Charles is not happy with you, he's thinking of suing you, these sort of things. And so I enjoyed mocking shitcoiners, and especially the founders, who are really absolute scumbags. And so what happened after the whole Ordinals inscriptions thing is I basically, at that point, it became clear to most people, I guess there's still some people who believe in crypto, but it became clear to a lot of people that those things were they really were just not going to go anywhere. And then, as scammers will do, they'll move to a different platform, and that platform was Bitcoin. And so once I realized that it was just the same story, it was just shitcoins. It was just fiat brain thinking, it was crypto thinking. Coming back to Bitcoin, I did what I'd been doing up until that point, but instead of attacking Vitalik Buterin, I was attacking various Bitcoiners like David Bailey. And, you could say that maybe I didn't, the tone I took wasn't always the best, or I did make some mistakes. Like there's a fine line you want to draw when you're covering stuff, especially on YouTube, because you want to amuse people and entertain people, but you also don't want to hurt. You're aware that there's a real human being, even if they're a scammer. They're still a real human being. And so I turned that sort of that intellectual firepower back on the Bitcoin space, and instead of sniping at shitcoiners outside of Bitcoin, I began to snipe at shitcoiners in Bitcoin. And the reason I was doing this is because I was always taught by people like Michael Saylor himself that Bitcoiners are the immune system of Bitcoin. And I think it's a very misleading thing. This idea sort of morphed into the idea that Bitcoin is magical software, and that it has all these equilibriums and incentives that will preserve it. and make it invincible. But it's actually not. What makes Bitcoin anti-fragile is Bitcoiners themselves. And Bitcoin's immune system, as Michael Saylor himself said, is the cyber hornets. And if you do something bad on Bitcoin, the cyber hornets descend on you. So Bitcoin Jesus became Bitcoin Judas. He was a great guy, did a lot of evangelism, and then took a wrong turn and was demonized. And Bitcoin has a long history of this. There are people like Trace Mayer, for example, who made great contributions in the early years. And I remember listening to podcasts with him in 2018 and 2019, and I think he helped me on my Bitcoin journey. And then he decided to do a scam coin at a Bitcoin conference, some sort of Mimblewimble coin. And he was basically canceled for that. Or maybe canceled is not the right word, because he deserved it, because he was shitcoining, and he was trying to get newcomers to Bitcoin to buy his shitcoin, which is inexplicable because he presumably was quite wealthy at that point. I don't know what happened. And so this is one of my beliefs, that Bitcoin culture matters a lot, and that the plebs are the immune system of Bitcoin. Bitcoin is just code. Bitcoin's code is very similar to Bcash. It's very similar to BSV, for example. It's not the software code. Obviously, their code is now a little bit different. They have larger blocks and stuff, but it's pretty much the same. And Bcash and BSV are absolutely terrible products, because one of them was they're both promoted by pretty bad people. And the whole social layer is broken, and from an engineering perspective, it's terrible. Large blocks, etc. And so that was. I'm responsible for making videos too, that sort of in my early Bitcoin days, that talk about Bitcoin as being this magic money that can defend itself. And it's only Bitcoin is remarkably robust and anti-fragile, but if we allow wolves in our midst, and if we allow scammers, and if we allow people who fill up the blockchain with spam and garbage, this can actually hurt Bitcoin, and can not just hurt Bitcoin's brand and image, but can make it much more difficult for people who come after us to spin up nodes. And the spam attacks of 2023 and 2024, if anyone spins up a new node today, it takes longer now, because there's an extra 90 gigabytes of spam in the blockchain, the UTXO set, which all the nodes need to, you can't prune this. The UTXO set is all the unspent, all the Bitcoin that hasn't been spent yet. And obviously nodes need to hold on to this, because when they see a transaction, they need to check for double spending and see if the Bitcoin's already been spent. And so they're real. You can't overburden the node runners and their computing resources. And we want everyone to be able to run a node. People who make $2 a day, we want them to be able to run a node. We don't just want, like the node I'm running currently costs, I have a Start9 server, which is fantastic. If you have the money, you should just buy one, and you can also build one. But I paid about $500 for it, and now because of inflation, they're going for like $800 or $900. And it's really the only way to run a node and use electors, use an Electrum server if you're non-technical, and also set up a Lightning node and set up Lightning channels. So it's great for that. But we want people who make $2 a day and have very slow internet to be able to run a node as well, because this is the real. As I like what Bitcoin Mechanics says. He says that nodes are the soul of the Bitcoin network, or nodes are the soul of Bitcoin. I've always thought that sounded like something out of Thomas Aquinas, if he had been around for Bitcoin. But I think it's true. And node runners and plebs who run nodes, these are the real Bitcoiners. These are the ones that need to defend the network. And it's good to give someone like Michael Saylor accolades when he's helping. And he did do a lot of good for Bitcoin education, came up with a lot of wonderful metaphors. And I probably listened to close to 1,000 hours of his podcasts. But we have to be willing to call out our own when they do something, when they start shitcoining, or they do something that hurts Bitcoiners. And as I tell my viewers, they should treat me the same way, because if we have a situation where we just trust a couple educators, and we trust a couple influencers, and we trust a couple billionaires, then Bitcoin can get captured much more easily when people aren't thinking for themselves. And a lot of people think that because they're not devs and they don't know how to code, that they don't have a right to have an opinion to these things. And this is exacerbated by the fact that we have a lot of Bitcoin Core devs today who sort of look down their nose at people who don't have coding backgrounds and mock people and say basically they shouldn't have opinions about Bitcoin.
Well, Matt, you're not technical enough to understand.
Exactly. So I like to, that's when I tell them that I studied a little physics at Stanford or whatever. So it's like I'm not a total English music major, but I would encourage everyone, especially now that we have LLMs and AI obviously hallucinates, but for the basic, so you shouldn't go to the LLM and say, explain Bitcoin spam to me, but you can certainly go to the LLM and say, what is an XPub? What's a pub key? What's a fake pub key? What's an op return? What's a how are inscriptions built, or how are BRC20 tokens built? And you can educate yourself about these things. What are hash functions? SHA-256 hash. What's ECDSA? The signature algorithm, or one of the signature algorithms for Bitcoin. And you can actually, Bitcoin technically is not that hard, and you don't need to be able to code to understand these concepts. And so I think it's very important that Bitcoin plebs learn some of this technical vocabulary so that they can have an opinion. And what people will find is that learning these basic concepts, and again, you don't need to be good at science or engineering or math or coding to understand them. I think when people learn these basic concepts, and they're not difficult, they're just a lot of them. There are a lot of little things. Like a SHA-256 hash function, it's actually very simple once you understand how it works. But it sounds intimidating. But once you learn about these things, then you'll learn how to dispel a lot of your own FUD, a lot of your own fear, uncertainty, and doubt about Bitcoin. So for example, the quantum attack that everyone's talking about, the real quantum attack is if a quantum computer, a powerful enough one, can see the public key of a transaction, it can reverse engineer it to find the private key, which is not possible using classical computing today. And then once they have the private key, then they can move your Bitcoin. But all you have to understand is, public key cryptography. And you don't have to be a cryptographer, but if you understand that, the private key is used to derive the public key, that one-way function is very easy to do, but going backwards from the public key to the private key is impossible to do. It involves some factoring that's not possible without a quantum computer. Once you understand that, then you're probably not as worried about quantum computing. And so there's a real value to learning these concepts. And then you can engage with the devs directly. And no one should, it's a little bit like during COVID, we were told that if you didn't have a degree in immunology, that you weren't allowed to have any opinions. And the irony there is the crowdsourced wisdom about the COVID bioweapon, which was very dangerous, and the COVID vaccines, which were very dangerous as well. The plebs, especially the Bitcoiners on Twitter, they got it all right. All the conspiracy theories were right. And so it's funny to see Bitcoin Core and some of the very technical devs doing the same thing, like, oh, trust the experts. Like you don't know anything about this. This is pleb slop. And so I'd encourage when people are trying to put you down like that, that's a very fiat way of doing. The whole Bitcoin ethos is that all of us have something to offer. And we shouldn't have strong technical opinions if we don't know what a hash function is. Maybe we shouldn't be on Twitter talking about hash functions, but spend an hour watching videos and learning about hash functions. Then you can have an opinion about it, and you can question. The great thing about Bitcoin is it's a very level system, and you might be right, and Adam Back might be wrong, or you might be right, and Michael Saylor might be wrong, and it's a little bit like Hans Christian Andersen and the Emperor with No Clothes. We really need people like the little boy in the crowd who are willing to say the obvious things like, wow, the emperor is naked. And this happens even in Bitcoin, where we have these collective delusions, like somehow that Bitcoin Treasury Companies are so important for adoption. They're not. They don't help with adoption at all. They just onboard people into further brokerage accounts. They don't make people sovereign Bitcoiners. So I would say don't let the snooty, haughty Bitcoin Core devs intimidate you. You should fight back. Don't just feed everything into an AI and copy paste it onto X, but learn to think through these concepts. Come to my channel, ask me questions, ask other people questions on X. Like, we live in an amazing time where you can just get There's so many smart people and good Bitcoiners on X who are willing to answer questions.
What's what were some of the main gaslighting points that really started, getting you digging in?
Well, my favorite one was so I was at, as I said, I was at UC Berkeley in the 1990s, and I got to experience and I actually met some of the people. Like I met Jacques Derrida, who's the sort of the father of deconstruction and one of the great post-structuralists. And I got to interact with post-structuralism and postmodernism and various forms of nihilism. And so I recognize that and these are often just rhetorical techniques, I recognize them when they're being used in Bitcoin as well. So my favorite one from last year was Bitcoin spam. No one really knows what it is. There's this sort of linguistic nihilism games that people were playing. Like you can't really identify spam. And we've seen this in woke culture. No one really knows what a man or a woman are, or the naming of the COVID vaccine was not a vaccine. It was gene therapy that hijacked your ribosomes. So people play language games in order to exert power on people. And so my favorite gaslighting from the spam wars of last year was no one really knows what spam is. No one knows what Bitcoin spam is.
Right? That was
you can't define spam, yeah. But you can't define it. But I'm certain it will get outpriced by monetary transactions. That was probably from Adam Back himself. So when you see people making arguments like that, you just you recognize that it's sort of fiat thinking, postmodernism coming to Bitcoin. Or it's just like you're not, as we talked about before, there's the priesthood of devs. You're not allowed to have an opinion. Quiet, silence. A Bitcoin dev is speaking. the great meme from.
What about filters don't work?
Yeah, filters don't work is another thing. The best part of filters don't work was filters don't work, but we need to remove the op return filter because it's causing problems. There's another one of those contradictions. The filters don't work is interesting too because it shows that you can be very smart and you can be a coder and you still don't understand very basic concepts like survivorship bias or survivor bias or there's an economist I love quoting on my channel, Bastiat, and he talks about the measurement problem with the unseen. And so when people say filters don't work, it's one way of thinking about that is, for example, the fence around my house doesn't work because there are no or my gun doesn't work to help defend my property because there are no like bodies in my yard because I haven't actually had to shoot anyone. And no one's ever climbed my fence, so I should clearly take down the fence because it's not doing anything. They're very basic concepts, and people laugh when you port them outside of Bitcoin into the real world. But saying filters don't work, how would we know? How would we know that they don't work if you don't see the spam ending up in a block? It could be because a node stopped it, a Knots node stopped it, or it could be because the spammer was driven out of Bitcoin by the filters. And this is literally what happened at Vitalik Buterin in 2014, where Bitcoin Core's dedication to driving the spammers and scammers away from Bitcoin led Vitalik to starting Ethereum and creating his own idiot container, which bought us some peace. So there's an example. I like to say that Bitcoiners filtered Vitalik Buterin. And so I think there are a lot of devs they believe that everything's a software and that if we just have the right cryptographic functions, Bitcoin will be perfect money forever. And this is magical thinking because they don't understand the cultural and the social layer. And when it comes to spam is a lot like crime. So if you have a really lax attitude toward crime, you're going to have a lot of crime. If you don't prosecute people who go into drugstores and, in California, for example, you could steal $999 worth of stuff from the drugstore and they couldn't stop you. Well, if you make shoplifting illegal, you're not going to stop every shoplifter, but you will stop a lot of people, and you'll stop people. You won't even know you're stopping them because they won't get stopped by the whatever's in your store, whatever barricade or locked cabinet. They just won't, because they realize that the drugstore is hostile to shoplifters. Then they won't even try. And so there's these sort of second order effects that it's quite worrisome that Bitcoin core devs, who are very smart people in many cases, are unaware of these sort of philosophical ways of thinking about various measurement problems in Bitcoin.
And then the conflation between censorship and filtration.
Yeah, this is another one.
Well, it's just insane. Like, what?
It's pretty bad faith. And then they won't tell you that the guy who invented filters in Bitcoin was a guy named Satoshi Nakamoto, and he invented quite a few of these filters. And you can go back and look in the Bitcoin talk forum, and you can see him talking about spam and Lady Gaga videos on Bitcoin. So Satoshi seemed to understand filters. He knew they weren't censorship. Satoshi seemed to understand what spam was, and he said there are ways we can fight it using transaction fees. He also said we can use other methods. And so the censorship, there's just been a lot of half-truths, technical half-truths and gaslighting coming from the other side. Filters are not censorship any more than the example I like to use is in Gmail, for example. So the largest attachment, at least as far as I can tell, is 25 megabytes. If you try to upload a larger attachment to an email, Google will make you use Google Storage or Google Drive or whatever it's called. And this is not because Google is censoring attachments. It's because it doesn't want email to become a giant file storage system, because we have other products for that, like Google File or Google Storage or Dropbox or Evernote or whatever. And so it's Gmail and Google are not censoring us when they limit the size of our attachments. They're just saying, this is email. It's mostly for text. You can have a small attachment. And Bitcoin's very similar. Bitcoin is money. It's not a very good file transfer service. The blocks are relatively small, up to just 4 megabytes every 10 minutes. And using it as cloud storage degrades it as money because it makes it harder for new node runners to spin up a node. And censorship is something that their argument doesn't even make any sense, because the only real people who can censor things in Bitcoin are the actual miners. And so if you send a miner a transaction and they listen to the US government and say, oh, that's not OFAC compliant, we're not going to put it in a block, that's actually censorship. But currently mining is so centralized. There are only 5 companies, 5 corporations producing 90% of all blocks. If there's censorship happening in Bitcoin, it would, they'd be the ones censoring it, not you and me running nodes, refusing to relay pornographic JPEGs. We're not the ones censoring it, and we're not censoring it because it's pornographic. We're just censoring it because the data field, it's just too big for the data field.
Yeah,
you can put tiny pornographic pictures if you want, like little emojis. No one will care, but we don't want blocks full of this garbage. It's like a really obvious point to people.
The way I should explain it to people, like back in the early days when this censorship argument, it's like, well, do you have no junk mail, please, on your letterbox? Because that is that censorship. Like, no, you are filtering. Like, you don't want the junk mail, you don't want the spam coming through. It's the same thing. And it was like, oh, well, does a water Brita, does the Brita filter censor the water? Like,
exactly.
No, it filtrates it. It's doing its job. But then the argument that kept coming back was, well, it's going to end up on your node anyway. So, why bother? Or you may as well just prune your node.
Yeah. Those are both. The first one is, I'm always shocked by how defeatist it is, because you can imagine it's almost like these Bitcoin core devs are just so tired, and like maybe they should just take a vacation if they're that burnt out. But can you imagine if Google came to you and said, we can't stop all email spam in your Gmail account, so we're not going to filter anything. We're not going to stop any spam because we can't do it perfectly. Or if Verizon came to you or Vodafone came to you and said, we can't stop junk telemarketing calls, so we're not going to stop any of them. Like, what kind of approaches to that? Like, spam is a problem on computer systems. Spam is a problem even in our physical mailboxes. And you have to fight spam or it gets worse. And you can never stop all spam. But for example, my Gmail works pretty well. It's the filters on it work. And the great irony is it's not using Adam Back's hash cache, which doesn't work, never really worked for spam. It's working. And the reason I bring that up is he says, you should listen to me. I hate spam because I invented something that was never used to stop spam in email. Well, email uses filters, just like Bitcoin uses filters.
So then we're going to come to now the big, the BIP 110, the core versus knots. Oh yeah, no, we've missed that bit, haven't we? Core versus knots. So Core, in many people's eyes, and especially reading through Hodlinaut's first two articles of his
Yeah.
4-part series, and I'm really looking forward to the third part coming out. I think, like many people, I was probably guilty of being naive around or believing the narrative that Bitcoin core devs were the shadowy supercoders. They were completely decentralized and completely committed to the cause to look after and maintain Bitcoin. But it turns out we had like three kind of super centers because John Attack, his lifting of the veil with his talk in El Salvador, and then his subsequent interviews on Knut's show and Bob Burnett's show as well, talking about how you had these centers, one on the West Coast, one in New York, and one in London, where it seemed to be as though they were like, trying to move fast and break things. It didn't really make any sense at all. And when they shipped version 30, yes, there's a huge amount of fanboys for that, and all the power to you. If that's the software that you want to run, that's great. But nobody wanted to really listen to like the reasons that people were offering up. Is like, hey, this is just a bad idea. Like, like in all of the stuff that we just went through there. And they obviously shipped it with the bug, which is not a good look.
Yeah, it had I think you're referring to the wallet deletion bug.
Hmm.
This was one of the great ironies. Bitcoin core devs saying we have the iron, the perfect process, and we're not fly by night like other projects. And then they ship something. They ship a new software that forces you to upgrade your wallet, and in the process deletes your backup of the old wallet that you're trying to move to the new wallet format. So that was, I think that provided some insight into their bugs occur in software, but there has to be a certain humility around this. And if you're going to be arrogant like that and you ship a bug, it's a pretty bad look. So I think the way we talked about the opportune wars of 2013 and 2014, where basically there was this space given, a very small space given for non-arbitrary data on Bitcoin. It was originally 40 bytes, and then it was up to 80 bytes. Much like the income tax, in the U.S. at least started off at 1% just for the filthy rich, and then gradually moved up. Same with you give them an inch, they'll take a mile. So we gave them 40 bytes, then they wanted 80 bytes, and this was really the standard on the network since 2014 or 2015. 80 bytes of arbitrary data in a transaction output. And Bitcoin Core decided in 2025, or they had tried this a few times before, but they decided to try to basically force that space open. And they did it after talking with a crypto startup, a Bitcoin affinity scam company called Citrea. Citrea didn't really even need the space, and at most they would have needed about 160 bytes. And so for some inexplicable reason, Bitcoin Core, I attribute it mostly to laziness. And they actually sort of said this, where it's like, well, we could have raised op return from 80 bytes to 160 bytes, but then we don't want to have to fight this battle again to go to 320 bytes or whatever. So we'll just rip the entire filter out, which is not what I would call a conservative software development. And that's not Bitcoin Core maintainers and devs always talk about themselves as being like janitors. They're just doing maintenance, which is obviously needed and a good thing. But ripping out age-old filters, especially when there's a lot of pushback from the social layer, is very irresponsible. They decided to go ahead with this. The Bitcoin Core maintainer who was in charge of this was an ex-shitcoiner from Postmodern UC Berkeley, who was dating the guy who was funding Bitcoin Core devs. And so she dated him and shot to the top. And he also dated a few other Bitcoin Core devs, female devs. And so she was the one who really kind of, she was a bit out of her depth. She was quite young. And she pushed this update through, this software update through, against the wishes of a huge percentage of the community. And as a result, Bitcoin Core ended up losing about 20% market share. They used to be close to 100%. Now they're closer to 75 or 80% market share, as there's been a mass exodus away from their software because it's buggy, because it has wallet deletion bugs, and because they basically made, it's not technically a consensus change, it's a change at the mempool policy level, but they made this change against the wishes of the community after having a policy Chow is famous for saying we never do contentious things at Bitcoin Core. And yet in 2025, they went rogue and they pushed this thing through, which has now exposed the network to giant op returns and all the problems that come with arbitrary data on Bitcoin in a place that's officially sanctioned. And you can go to Google and or ChatGPT and say, where's the designated spot for arbitrary data or non-monetary data on Bitcoin? It's op return. So this is a very special field that has this long history. So they lost a bunch of the network. People like you and me started running Bitcoin Knots instead, which is very close to Bitcoin Core. It shares most of the same code, but it has much better mempool filters, sort of conservative mempool filters, but it also has much more configurability, so you can really run it however you want. In spite of this huge loss of market share, Bitcoin Core decided to push through. I guess they didn't want to lose face or something, so they pushed through this contentious update. And they've now exposed the network to a new attack vector, which includes very awful things we don't have to talk too much about, but like child sexual abuse material, which previously you could embed it deep, steganographically, where no one would know it's even there. But now it's like an email attachment. And so if one of these things gets in the chain, and it's not something I talk about very much because it's a little bit like school shootings. We want to be aware that they can happen or that they have happened, but we also don't want to give people ideas, especially crazy people ideas. But there's now a child sexual abuse material attack vector on Bitcoin because of Bitcoin Core, and we're all exposed to it. The thing I didn't mention is while they opened this new garbage can on Bitcoin, they widened this new garbage can in op return, they declined to close a previous garbage can that provided a fee update of a fee discount of 75%, the so-called witness, the witness discount, which was a product of a previous software upgrade called SegWit from 2017, which did a lot of good things. But this is a problem with software upgrades. Sometimes there are unintended consequences. And so the SegWit upgrade plus the Taproot upgrade led to some of this inscription spam and BRC20 spam that we were talking about at the beginning of the conversation. And so we ended 2025 with Bitcoin Core having failed to fix the one attack vector, the inscriptions BRC20, what I call the inscriptions exploit or bug. And then they opened up a new space to put even more arbitrary data in a way that people could attack it. And so it's a difficult position it's put many Bitcoiners in, because when this happened, when there were spam attacks in 2014, Bitcoin Core understood that Bitcoin was a monetary network, and they were willing to fight spam to the extent of even driving someone like Vitalik Buterin, who started Bitcoin Magazine and was a Bitcoiner at the beginning. They drove him away from the project. But we have a situation in 2025 and now 2026 where the reference implementation, Bitcoin Core, does not see a problem with spam. And so they've basically gone against the tradition in Bitcoin. They're unwilling to fight spam. And what they're doing now is they're actually opening up new areas for spam, like op return. They're expanding the size of the garbage can, refusing to close other attack vectors. So we have a hostile reference node implementation. We have big Bitcoin media, Bitcoin Magazine, and Bitcoin Conference actually pushing spam on Bitcoin, advertising at their conferences, and funding these companies. And then we have the other problem, which I don't think we've talked about today, but mining pool centralization. I guess I alluded to it, where just 5 companies make 90% of the blocks. And these are 3 really large constituencies who don't seem to have a problem with spam. And they don't have a problem with spam because it's an externality. It hurts node runners. And a lot of these people, like the spammers and scammers, they don't even care about node runners or care about Bitcoin as money. And so in 2014, Bitcoiners were able to fight back with mempool filters and just by displaying a general hostility to spam, because Bitcoin Core and many of the same people, like Greg Maxwell, for example, and Peter Thiel, they were fighting, they put on a good fight against spam. But now we're in the weird position where 25% of the network realizes that this is a problem, but we have these very powerful actors who want to continue to spam because they profit from it. And this has led to the next escalation. So when you're fighting spam, there's a natural escalation where you fight online at the social layer, you fight on X, you fight on GitHub and the Bitcoin repo. Then you can fight it at the level of mempool filters. But if these things don't work, there's still an option that node runners have, which is the consensus, changing the consensus rules. In other words, doing a fork, a soft fork of some point. And so we basically escalated it to the next level, to the level of a temporary soft fork, not a permanent soft fork. But the idea here is to escalate until we can demonstrate enough hostility to spammers and scammers that they basically leave the Bitcoin community. But we have a problem because we have, like, the main Bitcoin conference is still promoting spam. And so this has become very contentious. There are people that say that this proposed soft fork does not have enough support. It clearly has quite a bit of support from the plebs. Currently 10% of the network is running the soft fork software. Some of those people, those may be duplicate nodes. There may be some people sort of Sybil attacking. On the other side, we have Bitcoin Core, where people are also Sybil attacking and running multiple nodes. So I assume that there's sort of funny business going on both sides. But even if you adjust for that, we're at about 10% of the network. 10% of the network is signaling, not technically signaling, but showing support for the soft fork by running this soft fork client. And then that's 10% of the network. 20% of the network is running Bitcoin knots, and so at least supports this at the mempool level rather than the consensus level. And so this is there's no real hostility to this. There are a couple of very loud names on X, for example. There are people who profit from spam who are obviously against it. It's unclear if the miners are even aware of it, but they mine a lot of spam, so they probably are not in favor of it. And so you'll hear things like, well, the hash rate doesn't support this, or this is a contentious soft fork. Well, this is one problem with mining pool centralization. If you have 5 large corporate actors who are building all the blocks, they don't have Bitcoin's best interests at heart, and they didn't during the block size wars either. Basically, we had Bitmain running covert ASIC boost, and they were profiting from it, and so they didn't want the SegWit soft fork. And we have something very similar today, where we can't expect the miners to signal for something that because they're very short-term oriented, and they have to make their quarterly numbers, etc. So fortunately. So in the SegWit soft fork in 2017, it was originally set up as something that was to be activated by the miners. So it was a miner activated soft fork. And people sat around, and a couple months went by, if I've read the history correctly. And basically the miners, believe it or not, they did not want the SegWit soft fork. They didn't want it because they were profiting from using they had a special way of using their ASICs that would have been ruined by it. So the Bitcoin community then had to change it to a user-activated soft fork. This was the first user-activated soft fork. It's called BIP 148. It was led by people like Sherilyn Fry, and I think I'm saying his name right, and Luke Dasher, for example. And this was the node runners basically saying, the miners don't get to make the rules of Bitcoin. We hodl Bitcoin, we run nodes, we get to make the rules. And so BIP 110, which is the soft fork we're talking about today, it learns from this mistake that SegWit made, where people wasted time sitting around for the miners to activate it, and then the miners were just never going to activate it. So what we did this time is we built it because Luke Dasher is very wise, and Dathan Ohm, who's the NIM who's running this, has obviously studied the history as well. And what Dathan did is he built his proposal on an email that Luke did. But to be very clear, they're separate people, and they have very different stylistic patterns. I've interacted with both of them online, so I can tell that they're different people. It's not just Luke wearing a mask. But this soft fork, Dathan Ohm has set it up such that it starts as a miner activated soft fork, but if the miners do not activate it, and if they are going to activate it, we would expect them, the game theory would play out that we would expect them to activate it closer to August, closer to the end. But if they end up not activating it, and they still may activate it, then the node runners who are running the software will activate a version of, there'll be a 2-week period where we will start throwing out blocks of miners who fail to signal in favor of the soft fork. So this is very similar to what happened at BIP 148 in 2017 for those who lived through the block size wars. And basically, this is a way of forcing miners to upgrade, because if they don't upgrade, they get their blocks thrown in the garbage, and they miss out on $220,000 worth of Bitcoin, plus or minus. And so this soft fork is the next logical step in an escalation that's taking place to fight a very real problem. There's 90 gigabytes of spam on the blockchain now. The UTXO set is more than 50% dust. The Taproot upgrade is more than 90% dust. Taproot outputs complete disaster. The UTXO set UTXO set has grown from 4 gigabytes to 12 gigabytes, and current blocks are 45% full of spam. So there are real problems with that are happening in Bitcoin. And we have 10 to 20% of Bitcoiners who run nodes who are aware of these problems. We have just a very small, just a handful of people, really mostly just bad actors who are against the soft fork. And then we have the vast majority of people not even aware of it, not aware of the problems that we're fighting, or thinking that we're just crazy people who are who are in favor of censorship and we want government whitelists. And because of you know how it is, but people are busy and it's hard to stay up on all the events, all the news in Bitcoin or anywhere else. And so this is a soft fork that does not have real opposition. There's no one, the people who are against it are not serious people. They don't have a lot of Bitcoin. They don't have a lot of conviction. The people who are for it.
Have you heard any good philosophical arguments against it? I mean, there's plenty of gaslighting technical ones, but like the philosophical ones,
I haven't heard any good ones. I've heard the slippery slope argument, which doesn't even make sense, because a slippery slope is something that if you go to the top of it and you start sliding down it, you'll go all the way to the bottom. Whereas doing a soft fork, everyone knows we've had multiple soft forks in Bitcoin history. It's not like this will be the first soft fork in Bitcoin history. And it's not like previous soft forks have led to a rash of soft forks. Like the last soft fork we had one in 2017 with SegWit. We had one with Taproot in 2021. We haven't had one for 5 years. Whereas, Ethereum and Monero and these other cryptos, they'll do, 5 soft or hard forks, even hard forks every year. So there is no slippery slope. There's no.
What about the, I don't want the belligerent minority to be able to have such a impact on Bitcoin?
Well, I think even the framing of that is wrong, because what we're doing is we're the defenders. Like Bitcoin was attacked by these other people, these other constituencies, like the crypto VCs. And the spam attacks are real. These are not imaginary, and they create a lot of problems for Bitcoiners. And so, yeah, maybe we're belligerent in the same way that people who got the Fauci vax are belligerent against Fauci now, because he's a scammer and an evil person, and he hurt them. And basically, these spam attacks are hurting all of us. So yes, we are angry, and there's sort of a populist take to this, which you would expect, because there's populism everywhere. But it's a lot of, as far as I can tell, it's just a lot of men with families at the head of this, and a lot of people who own more Bitcoin than Bitcoin core devs do, or that a lot of Bitcoin influencers or podcasters do, and they're very committed to it, and they're very sincere, and they have very high conviction, and so I don't think there's a slippery slope. It's not like if you do a soft fork to try to stop spam, that the next year you're going to do a soft fork to increase the max supply of Bitcoin. That the irony is we actually have people on the other side who've been advocating for tail emissions, and people like Peter Thiel who want to do a tail emission, which would end up increasing Bitcoin's maximum supply. So I would encourage. I think one way of getting a handle on this at the social layer is read, you already alluded to them, Hodlonaut's 2 articles. I believe they're called The Capture is the main title. So just Google Hodlonaut. He's a Bitcoiner who's been around, just a great guy, and he suffered from, he was attacked and sued by Craig Wright, who's the scammer who did BSV. So he's a longtime Bitcoiner and seems to be a very ethical guy. And he did a write-up of all the shenanigans, the nepotism, the dating, the corruption that's been happening at Bitcoin Core. So I would encourage people, go read those 2 essays, learn what's happening, and then go on Twitter, go on X, and read what various prominent Bitcoiners have to say about Holonauts' work. So Adam Back, for example, calls it tabloid slop or whatever he calls it.
Pleb
So
slop.
then, yeah, pleb slop or tabloid journalism. If you read Holonauts' essays, they're not tabloid journalism. They're incredibly meticulously researched. What a pain in the butt to put something like that together. So much work, and he's not getting paid for it. You should send him some sats over Lightning so to help him with his labors.
He's been giving a right to refusal as well, or right to respond, excuse me.
Oh, exactly. He contacts all these people, and then
Yeah.
they refuse to make a statement because obviously they're guilty of what he's talking about. Like and he draws on all publicly available resources, so you can
Mhm.
verify everything for yourself.
Yeah,
There,
he's deep down in
footnotes.
internet relay chats. Like he's pulling out the receipts of the receipts. Like
Exactly.
it's unbelievable work. Sorry, Adam, it's not slop. It is
Yeah, it's not.
incredible work.
This is something
And
that people can do who
yeah,
don't know how to code or are not aware of the technical debate. This is always it's a little bit like going back and reading the pro COVID vax people and what they were saying and just how they kept the narratives kept shifting and you know somehow the unvaccinated were going to hurt the vaccinated, but the vaccine still worked. That like just these logical contradictions that never made any sense. Like, or you could take off your mask, when you're at the restaurant table, but you had to wear it when you're walking to your table. This is the same thing. Read Hodlonaut, then read Adam Back, read all the Bitcoin core supporters on that side who are and what they say about it, and you have a very good idea who the bad actors in Bitcoin are. And then there's a whole controversy. There's the allegation that Adam Back went to Epstein Island, which I made a couple videos about. He appears to be the same person. Again, this is just an allegation. He appears to be the same person as a guy named Andy Back that Epstein was writing about and said that he liked him and he was on his island, etc. And this is an allegation that Adam Back has not confronted directly. He's put out some sort of corporate statements about Blockstream's fundraising. But there's just a lot of disturbing things going on in Bitcoin, a lot of weird things at the social layer, a lot of Bitcoin OGs behaving in erratic ways, and so many people like Adam saying, "I hate Bitcoin spam. Bitcoin spam is terrible, but I'm not willing to do anything about it." This is the most bizarre thing. Just everyone saying there's nothing we can do about it, and if you try to do something about it, you're a bad person. This sort of language online. And on X. So I'd encourage people to read those essays. That'll be an eye-opening moment for many plebs.
we got a lot of what's been termed Luke derangement syndrome, because one of the biggest pushbacks from people is like, well, I don't want to run a Bitcoin client that's got only one maintainer. That makes absolutely no sense at all. And I think there's also some misunderstanding. I think a lot of people believe as well that it's Luke that has written the BIP, which, as you said earlier, is a different person.
Yeah, it's clearly not. You can do your own stylistic analysis. People can. There are actually a bunch of things that Luke doesn't like about the BIP. Like he thinks it should have activated in January or February. He thinks, and there are things he would do differently. But
of 2027. So like
no, of 2026. Yeah,
right,
that it
okay,
should have.
Okay,
because we don't want child sexual abuse material on the blockchain.
Right.
And so it's by the grace of God, it hasn't happened yet, or maybe the big mining pools are filtering or something.
And
But
so on that point, because a lot of people just like stamp their feet and just yell, "Oh, this is complete nonsense. You're being hyperbolic now. You're trying to drag something up. You're trying to like make a point using like the absolute worst case scenario." It's like, well, yeah. I mean, I run a node. I certainly am filtering, that I see that as an attack vector, whether it's hyperbolic or not. It's like, okay, I'll listen to it. Right, fine. I'm running a node and I'm going to like make sure that filters are up because filters work.
Mhm.
And I don't want any of that. And besides, I don't want any of the other crap. It just like there's a video the other day of Casey Rodamore, and I don't know if it's his girlfriend or wife or Beyonce sitting in bed together, laughing about a JPEG that he's inscribed on the Bitcoin blockchain of some guy doing a skateboard trick, and he's superimposed Pepe the Frog's head. I'm like, what the like?
And it's even worse because before that, I've seen that video. Before that, he has to black it out. But basically, all this pornographic material. I think it's kind of cartoons, but it's actual pornography as well. If you watch the beginning of that video, you'll see they black the whole thing out. And so, I mean, that we have this is one problem in Bitcoin at the social layer. We have antisocial characters like him, and he's the guy who actually discovered this hack. He created Ordinals, discovered the inscriptions exploit, and instead of doing the right thing and reporting this as a vulnerability, basically tried to make a career out of it. I assume, I don't know, but I assume that he minted a whole bunch of these things for himself and sold into the big bubble that he created and made tens of millions of dollars from it. And we're left with his garbage on the chain after he's profited from it. And he tries to do, I haven't talked about him that much because he tries to do, outrage marketing and get people upset about it. But we have actual antisocial, what I would say almost sociopath or NPD, narcissistic personality disorder type people in Bitcoin, who in the past we did a good job of keeping them away. Like if you do a Bitcoin conference and invite Craig Wright, no one is going to come to your conference because why would you give such a horrible person a platform? And there are people like Craig Wright in. I can say that Adam Back has threatened to sue one of my friends over a tweet. So there's some parallels. And my friend had to take down the tweet, or he would have been presumably sued personally by Adam or by Blockstream. So there's some really nasty stuff going on, and I encourage people to be aware of it. We need to guard Bitcoin at the social layer, like people like Casey making videos like that and laughing. Why is he still being platformed at Bitcoin conferences? I mean, he's friends with David Bailey, I guess. And David Bailey's invested in companies that use his software hack, the inscriptions exploit. But just very disturbing stuff like this going on. But fortunately, the inscriptions thing is just kind of, it really is a hack. It's not how Bitcoin is supposed to be used. But the opportune space has this special status. And so if any sort of bad material were to end up there, it would be just a completely next level thing. And what a lot of people don't realize, so spam has been a problem since the beginning. And we fought it successfully in 2014, and we haven't fought it. We've been sort of kicking the can down the road since 2023 and not doing anything about it, or some of us have been. The problem with kicking the can down the road is things get worse. And so now people are saying, oh, the soft fork is going to be contentious and it's going to cause problems. Well, yes, soft forks can cause chain splits. There can be problems, but kicking the can down the road, this is what the fiat system does. Just, kick the problems onto our grandchildren. We're not going to do that with Bitcoin. The sooner you confront a problem, the sooner you can fix it. And if we don't fix this problem, there's a very real risk if a large CSAM op return ends up getting mined, we have a real problem, because we have the way the Bitcoin blockchain works is it's immutable after a certain point. You cannot rewrite the blockchain, which is a good thing because we don't want our transactions, our confirmed transactions being reversed. Like you wouldn't want to have sold your car for Bitcoin and all of a sudden that block gets remined and your Bitcoin's gone and the guy still has your car. So if you have malware on your computer and someone ends up uploading child sexual abuse material on your computer, the responsible and the ethical thing to do is, if you come across it or realize that it's been happening, you delete it, you clean your computer, you take it to an expert. But we can't do this with Bitcoin because we can't rewrite the blockchain. So if CSAM ends up in the blockchain in this designated spot, which basically says, hey, put your non-monetary data here, this is the place for it in Bitcoin. If it ends up there, we have 10 to 30 minutes to try to reorg that block out and basically build on the previous block in an attempt to make that block go away so it doesn't end up in the Bitcoin blockchain. But after 2, 3, 4, 5, 6 blocks, really just 2 or 3 blocks, it's impossible to get this stuff out of the chain. And it will be there forever in the designated spot. The only way to get it out is to basically hard code the blockchain, to go back to that block and say, kind of scrub the block and say you can't look inside of it. and nodes should ignore it. They should not look at this horrendous material that's been mined here. The problem with doing that is the Bitcoin blockchain becomes a trusted blockchain at that point. And we set the precedent that we can go back and just manually change blocks and transactions. This is what Ethereum did. This was the nail in the coffin for Ethereum. Like, it was a scam from the beginning. They did pre-mine, but when they had the DAO hack and they rewrote the chain and they reversed history to bail out all of Vitalik's buddies, this let people understand that it was about rulers. It wasn't about rules. It was about just doing whatever we need to do to the blockchain so we can make as much money as possible. In Bitcoin, we've avoided this. We've had various bugs, various problems. We had a problem very early in Bitcoin that Luke Dasher helped to fix. And the way he helped to fix it was using the natural dynamics of Bitcoin miners and basically reorging out the bad blocks. So this is the proper way to do things. But if something bad were to make its way into the chain today, heaven forbid, it's unlikely we'd be able to get, like, I'm renting hash power now. I would try to reorg it out. There are a number of us who are trying to defend the chain, but we can't compete with the large mining pools. You need millions of dollars a day to compete with them. And so BIP 110 is a prophylactic. It's a way of preventing something like this from happening. And if people are asleep at the wheel and something like this happens, we're still going to have to do some sort of fork, and it's going to be awful. And it could be. I want to be very careful because there's a long history of people saying, like, if you don't do this, Bitcoin's going to die. So I don't want to be in that category. But on the other hand, it's one thing to cry wolf, but sometimes there really is a wolf outside. And this is one way the intel agencies and the government can attack us. We're basically like, there are no wolves. They're just, nothing bad has ever happened, so nothing bad will ever happen.
You use the term I think we should concentrate on, because I think it's something people are getting a little bit scared about, and that's chain split. Do you want to explain? Because for some people, they might believe that then that means there's two different tokens, which isn't the case in a soft fork. That's only the case in a hard fork. So if you want to put people's minds at ease as best you can as to, what would it look like, a chain split? What were the problems it's going to cause, and how does it work?
Well, I would start by, it's a great question. I would start by saying that there will be no chain split if the miners activate this soft fork. And so that's the best thing, that these large companies that don't care about Bitcoin, that just have everyone direct their hash at them and they mine blocks, they should activate the soft fork because it doesn't add any new features. It's very conservative. It basically returns Bitcoin. It closes these attack surfaces that were opened by Bitcoin Core.
If they are listed public companies, everything you just talked about should be of a great concern to them.
Absolutely. I don't think they're lawyers. This is not something we want to do because the U.S. government is worried about it. But it is true that mining CSAM is probably not something you want to do if you're a large regulated U.S. company, or if you're just a human being with any morals. So this is another area where a pound, whatever the expression is, an ounce of prevention is worth a pound of reacting after the case, or whatever. So there doesn't have to be a chain split. And this is a soft fork that very few people hate and a lot of people like, and a lot of people are apathetic about. But this is one of the interesting things about Bitcoin, is the way it's designed is that it's much easier to soft fork than hard fork. And that an intolerant minority can actually, I believe, successfully soft fork, which is I don't think it's something to be concerned about, because the real way, I think it's important to distinguish between soft forks and hard forks. So I'll be using the terminology a little bit different than even I used to use it. But a soft fork, I think the right way to define it is a soft fork narrows the rules. So for example, a soft fork would be taking the block size down from 1 megabyte to a half a megabyte. So existing nodes would still accept those nodes currently accept 1 megabyte blocks. And so they obviously accept a subset of that, which would be half megabyte blocks. So a soft fork narrows the rules, a hard fork expands the rules. one of the reasons that the Bcashers and Big Blockers and Roger Ver failed is because they did a hard fork. They increased the block size, and they needed, as part of that, they needed to get everyone to upgrade, all the old nodes to upgrade to new nodes that would recognize that increased block size. Because if your node's rule is 1 megabyte or less is what I accept, that'll work for smaller blocks smaller than 1 megabyte, but your node will reject 4 megabyte or 8 megabyte or whatever the Bcash blocks were. So soft forks narrow the rules, hard forks widen or expand the rules. This is a soft fork. It's very conservative, doesn't add new functionality. It closes these holes that Bitcoin Core has opened up irresponsibly over the last 3 years. And so it's not something that anyone opposes except people who want to spam on Bitcoin or own these portfolio companies. A chain split happens. You can have a chain split with a hard fork, and you can have a chain split with a soft fork. And what this means is you have a common history. You can almost think of it like the church, where you had sort of one church, and then you had the Great Schism in 1054, and the Orthodox and the Catholics sort of split off, but they have that common history. And then the one that everyone knows, obviously Martin Luther, and the Catholic Church going here, and the Protestant Church doing here. And then you had many forks on the Protestant side as well, and maybe on the Catholic side. So a common history, and we could have something, a chain split in Bitcoin would be the same thing, where there's this common history that leads up, and then they have all these blocks in common, and then there's a block that doesn't conform to the new rules, and so you end up with two different chains. Now, the way this soft fork is designed is that, or the way soft forks work is that the old nodes, as I said, the nodes, so if we get a chain split, let's say we have the legacy chain and the BIP110 chain, and they're each enforcing different rules. The legacy chain will be the CSAM chain, the spam chain. There's no reason anyone would want to be on that chain anyway, because the other chain is much better and much less subject to those attacks. But where you can have a chain split is if you have people mining, if you have miners or mining pools willing to mine on both sides. And so what will happen if there is a chain split, both sides could start to get extended. But there's an asymmetry where the BIP110 chain can wipe out the legacy chain, but the legacy chain cannot wipe out our chain, the BIP110 chain. And so I would expect this. We've had previous chain splits. The one that I was talking about that Luke Dasher was involved in, which was sort of an emergent, it was caused by some problem with the software where one side, some nodes got out of consensus. That soft fork lasted for about 9 hours, I think. I would expect this one to be very short as well. But what would happen is if you're transacting, there's a natural incentive for people. If you have to transact during this period, you should transact on the BIP110 side, because those blocks cannot be wiped out by the other side. Whereas if you do a transaction on the legacy chain, for example, if you're a miner and you earn a Bitcoin block reward, which you can't spend for 100 blocks, there's a chance that that chain gets completely wiped out and you don't end up getting paid. So there's a natural game theory that favors the side that is narrowing the rules. Now, the only way to resist this, our side may not get enough hash power, but if our side does get hash power, what will happen is we'll start to extend our side of the chain, and then we'll have the difficulty adjustment. The difficulty of mining a block will drop, and it'll become incredibly profitable and cheap to mine on our chain, which will drive people over. And then once you have a certain number of people on our side, a certain number of the hash rate, a certain amount of the hash rate, there will be a cascade where everyone will have to come over. And if just one large mining pool came over to our side, like Foundry, for example, which is just 30% of the hash, everyone else would be forced over just by the game theory. And so there doesn't have to be, to summarize, there doesn't have to be a chain split. The people who are trying to put obstacles in our way and spread FUD, if there ends up being a chain split, it'll be because they fought us. They basically said, we hate spam too, but we're still going to fight you for ego reasons.
And just to put the final pin on that, that would last for a year. This isn't like a permanent thing.
It's unlikely that it lasts even that long. So that previous
the BIP active right. After a year, people could come, because we have production ready with Jimmy and Samson and Parker that are starting that up. The way I see this, I see as BIP 110 gives these guys time to like build out, whatever it is, whatever ideas that they want. Then you've got a third client as well, like a real
Yeah.
third client, let's say.
Yeah.
And it just seems
Well,
sensible.
yeah. So I understand what you're asking. So yeah, BIP 110 is what's called a temporary soft fork. So it automatically expires after approximately 1 year after it activates. Technically, it's a certain block height calculation, but it's about a year, and it just goes away then. But as you said, it buys us some time. It slows down the growth of the blockchain. It throws a lot of wrenches in the works of the spammers and scammers and the crypto companies. It'll drive those people away from Bitcoin. It'll decrease Bitcoin Core's power, and so it does a lot of helpful things. But the enforcement of the rules of BIP 110 last for a year. Whether there's a chain split, we may not end up. There's a good chance we don't even have a chain split. That if we get a few BIP 110 blocks, we get a cascade, and everyone just the miners activate it before August. If the miners don't activate it before August, there's a good chance we will have a chain split in early August. The only way to fight BIP 110, though, would be to do what's called a URSF, which is probably its own podcast right there, user-resisted or user-rejected soft fork. So people say we're forking off the network. We're actually not. We're doing a soft fork that has the potential to wipe out the other side of the chain split. The other side, if they had conviction, they can fight us by doing a URSF. But these are people that don't have a lot of Bitcoin and they don't have a lot of conviction. If they were to do that, then if our opponents mount a URSF, there will be a permanent split in the Bitcoin blockchain, and we'll end up with two assets and two networks. And even in that case, I think the BIP 110 side wins, because the other side, why would you mine on CSAM chain? Why would you want to have anything to do with CSAM chain? The good news for plebs, your Bitcoin is going to be fine. If there is a chain split, you will own, your private keys will work on both sides of the chain split. But it could be disruptive for people who are trying to transact during that particular time window when the BIP is activating.
And I think that's the concern of people that work in like the payments area, for example. That have been on.
It could have implications for the Lightning network and its topology, because you could have one version of the Lightning network that's kind of anchored to one side of the chain and another one that's anchored to the other side. But my response to that would be yes. There's a chance this gets disruptive because we have a real crisis in Bitcoin. We have a real problem. And sticking our heads in the sand, you want to see disruptive, you want to see a chain split or problems, wait till CSAM gets in the chain, wait till blocks are 60, 70, 80. I often ask these people that are fine with 40% of block space being spam, at what point would you start to get worried? And a lot of these people, the problem with spam is it's a parasitical use case. And so if it gets up to 80, 90%, Bitcoin will not be usable. You won't even be able to open and close Lightning channels. And so it will end up hurting layer twos as well. So for the people who don't want drama, they don't want contention, they don't want problems, they don't want a chain split, these are people who have no other solutions. They're fine leaving the blockchain open to CSAM. They're fine with just a slow death of Bitcoin, where it fills up with spam, where all these Bitcoin affinity scam layer two companies start putting even more spam in the chain, and Bitcoin ends up looking something like Ethereum. And it's a gradual process. Bitcoin doesn't die overnight, but as the culture gets corrupted and as these things get accepted on chain, it can cause real problems. And so this is just like it's just like Social Security or entitlement spending with the U.S. federal government. Yeah, there's going to be a big problem one of these days, and if we could solve it today, it would be very painful. We could have solved it 20 years ago, when I remember my dad talking about at the dinner table. We could have solved it then. It would have been painful. It would have been a lot less painful than doing it today. Doing it today is going to be a lot less painful than doing it in 5 years from now. And it's the same for BIP 110. This is an absolute problem for Bitcoin. Bitcoiners are going to have to do something like this. And the longer we wait, the larger the blockchain gets, the bigger the UTXO set, and the bigger the problem. And so there are people like Luke Dasher who have Bitcoin's best interests in mind and have a track record of actually predicting things and then seeing them play out. Whereas on the Bitcoin Core side, we have people who get paid in fiat. They just consider it a software job. They don't really care about these things. And so I think every Bitcoin node runner has to sort of consider this. and figure out what they're going to do. I'm obviously running BIP 110, and it's now available in knots itself if you download Bitcoin knots. I'm also mining, trying to mine BIP 110 compliant blocks. I'll give you a link you can put in the description notes below. If people want to learn how to, this is something I don't know if we'll have time to talk about today, but a bunch of us have figured out how to mine Bitcoin from home at an industrial level. So I'm currently mining at 5 petahash per second per day from home. It's not that expensive because you earn most of the money back. So I have a YouTube video I've created a permalink for, which is just bitcoinuniversity.com/mining. It's a free tutorial if people want to learn how to run a node and mine Bitcoin from home and sort of support this cause. I would say that to the extent Bitcoiners actually become real Bitcoiners and run nodes and mine with them, once you start doing that, all these things I've been talking about today, they're not abstract. They're not, they're very, very concrete. It's just like driving a car. Like if you had never driven in a car and someone started explaining how the engine worked and all the things that could go wrong, you wouldn't really understand them. But when you drive a car, you realize it's a great invention. And, there's certain things you should never do with a car if you don't want to end up dead, in the same way with Bitcoin. And if you're a node runner, there's certain things that you don't want to do. So I'd encourage people to get their hands dirty.
On the hash rate, that's one of the other sides on the core side of things, original chain, whatever you want to call it. They're saying BIP 110 is never going to get the hash power. But what we've seen, and what's the episode that's going to be released just before this, I believe, is with Bob Burnett. And Bob,
wonderful,
barefoot mining, and he sits on the board at Ocean, and he's mined some blocks already, signaling 110, and so has Alberta. And I think there's one more. Is it Pi mining, Pi block, or something like that?
I think that's more of a Stratum endpoint that you can just point to. That's for plebs can point hash to there. But yeah, it's very similar.
And then the rental market. I've done an interview, as has Canute, with Marcellus, Ghost of Marcellus, who has been teaching people. Like he kind of got.
I listened to both of those. Ghost of Marcellus is a legend. Like he's serious Bitcoiner who really understands Bitcoin, and he's taught me a lot. So go listen to Knute's interview with them and Daniel's interview as well.
And so like this is the problem of the centralized mining. So this is why people don't believe the hash rate will ever move, because of the and now let's say Foundry, for example, activation comes along 1st of September, whatever it is, I forget the exact block height. Now Foundry are the first to find the block, and they just stick it on the old chain. And then they find the second block. This is not uncommon, right? That they find blocks in a row. And so they stick it there as well. But we know you need 6 confirmations. The next block in, let's say, is a BIP 110. They're now sitting on like a real kind of dilemma here. It's like, well, oh crap. Well, who's going to win the next block, because the race is on? And you need those 6 confirmations. And as you said earlier as well, the 100 confirmations, if you have Coinbase coins rewards, you need 100 confirmations before you can move them. So,
yes, exactly.
Like the game theory here is very interesting. And even if even if you are the biggest mining pool in the world, are you going to play? Are you going to just throw dice at the craps table, or what? And again, these are listed publicly listed companies.
And we're currently at 10% of the network. There's 10% of us.
There's fiduciary duty there as well.
We're gonna throw out your Foundry. We're gonna throw out your blocks if they don't signal for it. So that's the first thing they have to. It doesn't matter what's in the block. They can still mine spam in that first step, that first stage, but they have to signal in favor of BIP 110. So there's this kind of 2-week period, 2-week difficulty epoch. So that's even before
they could even mine a clean block.
Well, no, we'll let them mine a block completely full of spam, and as long as it signals for BIP 110, we won't throw it out, because there's this transition period. That's the really interesting thing. So, but then after it activates, no more spam in your blocks. But it's just like SegWit. It's like the miners in BIP 148, the miners who did not signal for SegWit. The threat was their blocks are going to get thrown out, and that worked. That brought all the miners on board. They got scared. We're currently 10% of the network, and we're growing every day. And we have a very reasonable position. We're not trying to turn on new functionality like a lot of Bitcoin core devs want to do and do fancy bells and whistles. We just want to protect the blockchain. And we're just kind of like normal people, family men. We don't write stories about having sex with a dog like some people on the other side, like the guy who invented this spam. Like there's some really disturbing people on the other side, and so people should know this, that you'll know them by their fruits.
All right, Matt, we've been going for a long time, so let's close it out. If you had one last orange pill left to give to somebody, who would you give it to and why?
Oh, that's right. I'd probably give it to my father, who's 85 years old, and he really supports my work in Bitcoin. And he trades. He really likes the BlackRock ETF. He trades in and out of it and makes money with that, and thinks the whole thing is cool. And he's a brilliant man. He's very smart. He could understand, and he's very with it even for an 85-year-old. He's more alert than I am sometimes. So I would give it to him just so he could see what I see with Bitcoin. Because when I see Bitcoin, I see this incredible, beautiful thing. And I've been around long enough where I can see a lot of it and how all the pieces push together. So that's what I would wish for my father, and that's what I would wish for really every Bitcoiner, to get your hands dirty and really see what a beautiful gift Satoshi left us with.
Absolutely. How can people find you if they want to come and follow you and watch your videos or interact and join the conversation?
You can find me on YouTube. You just search for Bitcoin University. The official name of the channel is Matthew Kratter's Bitcoin University, because it's not the definitive Bitcoin University, it's just my version of what that would look like. And I guess we'd have to wait for Satoshi to do the real Bitcoin University. But yeah, if you type on Bitcoin University in YouTube, feel free to drop it in the comment section, one of my videos, ask your questions about any of this, because I love getting new ideas for videos. You can also find me on Twitter at Matt Kratter, MattKratter on Twitter. So I'd love to interact with people there as well.
Excellent. Well, thanks for everything. Thanks for what you're doing. I look forward to catching up with you at some point again in the future, and hopefully in person sometime soon.
Likewise. Thank you so much, Daniel. It's been great.
See you, Matt.